Be Wealthy and Smart, episode 798.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about Warren Buffett buying back Berkshire Hathaway stock. Because just about anything Warren Buffett does makes news. And earlier this year, he sold some of his airline stocks and did make some purchases, namely a gold company and a Japanese financial company. But we've heard him say that there aren't really opportunities that he likes at the right price in order to spend his overwhelming pile of cash he's been sitting on. So what has made him buy his Berkshire Hathaway stock? And does that signal to us as investors that this is the right price for us to be considering purchasing Berkshire Hathaway? Well, let's take a look, and I want to share with you this article from CNBC. It was written by Fred Imbert, and it says, Warren Buffett's Berkshire Hathaway bought back a record $9 billion in stock in the third quarter. As the coronavirus pandemic weighs on its operating earnings and stock price, Berkshire Hathaway ramped up its stock repurchasing program even more in the third quarter, nearly doubling the record buyback from the second quarter. Warren Buffett's conglomerate bought back $9 billion of its own stock. It was revealed Saturday in its third quarter earnings report. That's up big from the $5.1 billion level during the second quarter that turned heads when it was announced and brings Berkshire's total buybacks to $15.7 billion for 2020. Berkshire repurchased more than $2.5 billion in Class A shares and about $6.7 billion in Class B stock during the quarter. This blew away the UBS estimate for a total quarterly buyback of just $3.2 billion. All right, so I want to pause there and just clarify that the Class A shares are the original shares of Berkshire Hathaway, which are in the six figures. So he came out with the less expensive Class B shares, which is what most investors are purchasing. So just to clarify why there's two classifications, and if you're looking for it, you probably want to look at Berkshire B, which is BRK.B. It goes on to say, Buffett's repurchase spree comes amid a tough time for its operations as the global economy struggles to recover from the coronavirus, directly impacting the company's wholly owned businesses, which include railroads, utilities, and insurance. Berkshire said its operating earnings came in at $5.478 billion, down more than 30% from the year earlier period. But the company's net earnings, which account for Berkshire's big investments in the public market, like Apple, skyrocketed more than 82% on a year-over-year basis to $30.137 billion. Apple, Berkshire's biggest stock holding, rallied more than 26% in the third quarter. Coca-Cola gained 10.5% over that time period, though Buffett has cautioned investors not to pay attention to those net earnings because the investing gains are unrealized and volatile. In his annual letter released earlier this year, Buffett discussed when he and Berkshire Vice Chairman Charlie Munger would decide to repurchase stock. Our thinking boiled down. Berkshire will buy its stock back only if A, Charlie and I believe that it is selling for less than it is worth, and B, the company, upon completing the repurchase, is left with ample cash, Buffett wrote. Over time, we want Berkshire's share count to go down. If the price-to-value discount, as we estimate it, widens, we will likely become more aggressive in purchasing shares. We will not, however, prop the stock at any level. Buffett also defended the practice in general at the Berkshire annual meeting in May. When the conditions are right, it should also be obvious to repurchase shares, and there shouldn't be the slightest taint to it any more than there is to dividends, he said. Despite a nearly 20% comeback in the third quarter by Berkshire Hathaway's Class A shares, the stock is still widely underperforming the S&P 500 this year. The shares have lost 8% compared to a 10% total return for the S&P 500. Buffett's buyback spree comes as the Oracle of Omaha has made relatively few big moves this year. In late August, Buffett announced that Berkshire had taken stakes of at least 5% in Japan's 5 leading trading companies: Itochu Corp., Marubeni Corp., Mitsubishi Corp., Mitsui & Company, and Sumitomo Corporation, but the company has announced no other major acquisitions this year. Even after the record buybacks this year, Berkshire's cash pile still stands at $145.7 billion through the end of the third quarter. End of article. Well, there you have it. Warren Buffett buying Berkshire Hathaway stock back because he does think it's undervalued, but he also wants to have lots of cash left over to take advantage of any future opportunities that might present themselves. It's not unusual that this stock would be underperforming this year, as it said, down 8% for the year when the S&P is up 10%, for that differential of 18%. That's a huge difference, but not unusual because Berkshire is considered generally more of a value company than a growth company, even though its largest holding is Apple. Most of its other holdings tend to be consumer stocks and, as they said, transportation and utilities, etc. So this does tend to fall more into the value category, which has been out of favor for several years. But having said that, should we get some sort of a deeper recession, this is exactly the kind of company that people will jump to first. And the fact that Buffett is buying back shares tells you it's a great value right now. The other thing that really caught my attention was all of his purchases of these Japanese financial companies and trading companies, which is interesting, but it makes sense because Warren Buffett being a deep value buyer, Japan has been in a bear market for so many years. In fact, I think its stock market peaked in the 80s and has not seen a new high since. So it's maybe the point where he's saying that there's so much value he's seeing. Maybe we've seen the bottom in the Japanese market. Who knows? But he certainly has found value in these new purchases that he's made. And it's not always like him to be buying outside of the United States. So that's another very interesting signal. It just goes to show you that these Japanese trading companies may be offering really great value at the right price right now. So we'll keep an eye on Berkshire Hathaway and Warren Buffett and keep reporting back to you. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.